Well, we're into another election in Canada, and once again, all the parties are promising how they're going to make it easier for you to buy a house. In this week's Canadian Real Estate News, we'll be going through the Canadian Real Estate Association's monthly stats that depict a very sluggish spring real estate market. Matilda's question of the week is explaining the differences between an insured, insurable, and uninsurable mortgages, why that matters to you. We'll of course give you this week's best mortgage interest rates, and we'll talk about how each political party is promising they're gonna make it easier for you to buy a house in Canada. Tariff uncertainty keeping home buyers on the sidelines, says the Canadian Real Estate Association. These are the monthly stats put out by the Canadian Real Estate Association, and there's no way to sugarcoat it. February was a very sluggish month in the Canadian real estate market. Sales were down about 10% year over year. Interestingly enough, new listings actually dropped month over month about 13%. That typically doesn't happen. And we also saw the Canadian Real Estate Association's composite benchmark price drop about a 1% year over year, and we saw the average price drop about 3%. As always, national stats don't tell you what is going on in your particular market. That's why in my monthly Canadian Real Estate Market Update videos, I break down cities individually so you know exactly what's going on in your market. But you can see, looking for example at the pricing chart here, how much the markets in Ontario and BC, more specifically Toronto and Vancouver, impact the national stats, as those saw month over month and year over year price declines, whereas most other provinces saw price increases. Clearly, this is a market with a lot of uncertainty for both buyers and sellers. Most people don't make a decision to either buy or sell when there's a lot of political and economic uncertainty. And I expect this sluggishness will likely continue. Both buyers and sellers aren't looking to jump into the market with all the political and economic uncertainty. Until that changes, this is probably going to be what we're looking at for a spring market. The federal government is providing the city of Toronto with $255 billion in funding in a historic housing agreement. Once again, no, this is not the city of Toronto building any homes, nor is it the federal government. It is in fact funding for private developers to build purpose-built rentals. So no, this is also not a house that you are going to be eventually moving into if you're looking to purchase a home. And if you are thinking about buying a house and don't already have a great real estate agent, don't worry, I can handpick one for you from my network of great real estate agents across the country. Look in the description of this video for a link to book me in for that meeting. Doing some real quick napkin math on this announcement, the plan is to get 4,800 units built with $255 billion. And maybe I made a mistake here, but that comes out to about $530,000 per unit. There has to be a cheaper way to do this. Let's get you up to speed on this week's best mortgage interest rates. We'll take a quick look at insured mortgages first. The best 3-year, 3.94 through Marathon, and that's a drop. The best 5-year was through RFA, 3.89, and that is also a drop. Looking at the best 5-year variable rates, 4.05 for a static variable through Manulife, that's unchanged. And the best adjustable was through B2B at 4%, also unchanged. And now let's take a quick look at uninsurable mortgage rates. The best 3-year was 4.34 through TD, that's unchanged. And the best 5-year at 4.29 is also through TD and also unchanged. Looking at the best 5-year variables, I found a 4.5% through Scotiabank, that is actually a slight increase from last week. And the best adjustable is 4.65% through First National, that is unchanged. Looking at the big 5 banks' best 5-year fixed insurable rates, there was a shakeup last week. I did make a video last week, but this week we didn't see any movement at all. CIBC came in at first at 3.99%, Bank of Montreal 4.25% in second, in third place RBC at 4.29%, fourth place was TD at 4.34%, and Scotiabank comes in at fifth place at 4.84%. You wanted a terrible bad dad joke, right? What do mermaids use to wash their fins? Tide. If you have a terrible joke I can use in a future episode, put it in the comments below.
What does 5-year fixed, uninsured, and insured mean?
In Canada, you actually have 3 types of mortgages. Most people think of variable versus fixed rates, but actually what you have is insured mortgages, insurable, and uninsured mortgages, and all 3 of those will result in different interest rates that you'll get. An insured mortgage is when the owner is going to occupy the property and the purchase price is under $1.5 million with less than a 20% down payment. This is often called a high ratio mortgage. And in that case, mortgage default insurance is required. A lot of people will think of this as CMHC fees, as CMHC is one of the providers. You actually have 2 others in Canada as well. Because this mortgage is required and it is going to be paid for by the purchaser when it's an insured mortgage, it gets added onto your mortgage total, the banks actually like this, and they're going to typically give you a little bit of a lower interest rate in exchange. An insurable mortgage is once again an owner-occupied property under $1.5 million, but in this case, the purchaser has more than a 20% down payment, so it can still be insured by the bank, but they would then have to pay for that insurance, and usually there's going to be a slightly higher interest rate than an insured mortgage, but less than an uninsurable mortgage. Lastly, you have an uninsurable mortgage. That is when the purchase price is over $1.5 million, or it's any type of investment property, and the down payment in this case must be 20% or greater, and you'll usually have the highest interest rates for an uninsurable mortgage. Mark Carney and Pierre Poilievre both vowed to cut the GST on new construction homes. Mark Carney and Pierre Poilievre both promised to cut GST on new construction homes, but will it actually help? I am going to be doing at least one separate video about how the Canadian election could impact Canadian real estate, but as of right now, there really hasn't been a ton of policy announcements other than this GST cut.
Sorry, I made that.
Interesting how the last two elections, that was pretty much all the politicians wanted to talk about.
Let me give you some details. The Liberals today shared their promise on housing. Let's look at the highlights. They're promising now to build or repair 1.4 million homes in the next 4 years, invest $1 billion in loans and grants for rent-to-own projects, introduce a tax-free first home savings account that will allow people under 40 to save up to $40,000, and double the first-time home buyers tax credit to $10,000. Now, the Conservatives and the NDP have already released their platforms. Let me just give you a refresher. I do not expect you to know this. There's no quiz. The Conservatives say they're going to build 1 million homes within 3 years. They say they're going to ban the home buyers not living in Canada and encourage 7 to 10-year mortgages. The NDP are pledging to build 500,000 homes over 10 years, implement a 20% foreign buyers tax on houses for people who do not live in or are not planning on moving to Canada, and double the home buyers tax credit to $1,500. Got all that? But how will the parties make housing promises housing reality?
And now all we're talking about is Donald Trump and tariffs. As of the time of recording, there's really only been one housing-related announcement so far. We're still very early in the election. The Liberals and the Conservatives are both promising to cut the GST on new construction. Where the policies differ though, the Liberals are only going to have this apply to first-time homebuyers, and the Conservatives will apply this to anybody purchasing a new construction home. The Liberals are capping the purchase price at $1 million, whereas the Conservatives are capping the purchase price at $1.3 million. They're saying this will result in savings of about $50,000 to $60,000. I'm all for paying less taxes, but is a $50,000 savings on a $1 million more purchase really gonna be what's making housing affordable versus not affordable? I'm less convinced of that. As I've talked about many times before on this channel, taxes and fees typically increase the price of a new construction home in Canada between 30 and 35%. So I'm in favor of anything that's going to reduce that overall cost. But I'm curious, what would you like to hear from the different political parties to make housing in Canada more affordable? Let me know in the comments below.